Welcome back to Make a Mill, the channel where we all want to make 7 figures. So let's get started right now. Okay, so today we'll talk about Hanesbrand. That's the stock we're talking about today. Hanes champion. You notice. I love their products. I put my money where my mouth is, baby. I put it. Oh, the Boston U. I'm just gonna start. Oh, it's champion. Actually, a couple days ago, the reason I'm having the champion, Hanes owned champion, but they recently spun it off, and I'll get into the news. I'm gonna pull up some charts and some visuals for you guys in a second. It won't be all talking head here. I'll pull some visuals up for you guys, but I thought I'll start with some fun stuff, some fun products that I use that Hanes makes. And I'm going off Warren Buffett's idea. He says invest in what you know. It's basically, I think he said, your circle of competence, or was that from business school? I can't remember. Was that Warren Buffett's quote or from Jay-Z in BU? I don't remember, but these are basically my undies. I haven't worn these yet. They're new, but I use these. I love them. This is silly, but this is fun. And of course, socks. So obviously they sell clothes. You all know Hanes. They had in the 90s, I think Michael Jordan did a bunch of commercials. Just wait till I get my Hanes on you. I think they had a commercial, little jingle, and I'm butchering that. I should do that better. I'm an artist, but yeah, I've lost 33% on the stock. I've lost, quote unquote, on paper. And that's what I want to talk about kind of today, is like, when should you buy a stock? When should you sell a stock? When should you hold it? And basically, I don't like to sell for a loss. There's times when you can do it, tax loss harvesting and other more advanced topics, but I like to sell for break even or make money. I don't know about you. That's what I like. So, being down in a position is somewhere that we all have to be at some point in the investing journey. Typically, it doesn't happen with your house. Like if you buy a house, maybe if you bought it in 2007, yeah, you had a problem. But typically, the value of a house goes up pretty steady over time. But stocks can really jump around, as we all know. So, like I'm in at 9 on Hanesbrand. Today is at 6, right? So I'm down about a third on the position, and I've been down up to 50% on that position, believe it or not. There was a time this year that was like down to like $3 or something, I think, or was it $4? I was down like pretty bad. It was pretty bad. It's a very small position in my portfolio. You should really diversify your investment holdings. Talk about that in another video. I gotta make a million videos now, but it's like maybe less than 5% of my position. So yeah, Hanesbrand, love Hanesbrand. A lot of great brands. I mean, I keep saying Hanesbrand. They're called HBI, Hanesbrand. I mean, they own not just Hanes, some other thing. I mean, sorry, not just Hanes. They own Champion. Some other thing. I should know this better, but it's not a big position in my portfolio, so I don't do that much research. So I was digging into it today. So I thought, let me give you guys a little bit of what I do, how I do it. It's not like I'm not an accountant. It's gonna be some boring stuff, some numbers, but it's like, we'll try to make it fun and simple. So let's go that right now. Let's get into it. We have HBI here, $6 a share. If you look at it, it's a consumer cyclical. What that means is, it goes up over time and then it goes down. It goes up, it goes way up, and then it goes way down, and it goes up and it goes up. It has these cycles that kind of ebb and flow. Not all businesses are like that. If you look at Amazon, it's just kind of like a steady compounding exponential curve up. But this is consumer cyclical, and what I mean by that is that there's a cycle. So like, think about it like this. Anytime there's hard times or a recession, basically people are going to cut back on going out to eat, they're spending, restaurants, movies, entertainment. Unfortunately, apparel gets cut, because people they need underwear and socks and enough clothes, but most people are not out there shopping for apparel because of need, at least well, okay, I'll leave it at that. But it's basically like you need food and shelter before you need clothes, technically, right? So I'm not gonna go down this rabbit hole too much further. Let's get into the stats. So just if you don't know how to read some of these, read up. Follow the channel, subscribe, comment, learn. It took me a while to learn all this stuff, but let's see. There's no PE ratio because earnings are not there. They're negative, so that's not good. So because you cannot have negative PE ratio, right? Has a pretty high beta. That means when the market moves, it moves even higher. But when the market moves down, it moves even lower. So right now the market's kind of moving down, and so that's why Hanesbrand is down. You know, I mean, I feel bad for the investor. You know, look at, if you invested right here, I love Google for this chart visual. You're down 75% in 3 years. I mean, that sucks. That is rough. That is no bueno, right? So, I mean, I think I invested around here a couple of years while I was in B school, baby. And I just saw value. It was value play, you know, and I'll get into why I like the stock. I like the stock in a minute. Yeah, market cap of 2 billion. So that's, I think anything under 10, they call small cap. I might be wrong on that, but it's a small cap. Basically, it's not that big. 2 billion sounds like a lot, but in the, you know, let me just show you Apple. You know, it's in the world of business, 2 billion is pennies. Like Apple could buy Hanes if they so desired. I don't know why they would, but you know, tomorrow, like for a premium, you know, they could drop $3 billion, because look, they're a $3.5 almost $1 trillion market cap of value. So Hanes is a really small player in this game. So, but one thing I learned from CFA studies also was more risk, more potential reward. So, like, you know, the market rewards you for the risk you take. So small caps are riskier. If you had invested over the last 30, 40 years, et cetera, blah, blah, you would be doing better in small caps than large caps. So take it for what it, you know, what it is, make your own decision. By the way, not investing advice. I'm just here to educate, entertain, provide fun and entertainment and some knowledge. Revenue is declining. So 2020, this was COVID, 6 billion, 7 billion. Okay, so that looked good. Everyone's at home, online shopping, ordering t-shirts and blah, 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 right? And then everyone goes back to work and starts going out. Revenue starts slipping, right? And then really everyone's back out a lot, and now things are tight, inflation's higher. Hanes is pumping the prices up, I'm sure. And although I got great deals off Amazon with those products I showed you at the beginning, trailing 12 months, the last 12 months, 5.5 million. So we don't like to see the top line going down like this. It's not great. It looks like, you know, Wall Street analysts and everything, they like to see growth, everlasting growth, unrealistic, everlasting quarter to quarter growth. So I'm looking long term at Hanes. I'm looking like, okay, these are great brands. Champion, I use it every day. Buy what you know. You know, that's why I started researching them in the first place. I'm like, wait, I buy this clothes and these is great value. Maybe this is a good company. And I saw, oh, this is pretty, dig into them, you know? So let's look at total assets. Actually, I kind of pre-looked at this. They have kind of a large debt pile. So if you think about if you wanted to buy the whole company, that's what market cap means. You would have to spend 2 billion, probably a little more, but they have 3 billion of debt, right? So think about that, right? What are you really buying? That's a risk. That big debt pile is a problem, is a risk, but you know, debt is good. Debt is cheaper. Here's some MBA learning applied. Debt is cheaper than equity. So when companies issue debt, when they basically, you know, let people loan them money, it's a lot cheaper in the long run for companies than if they were to issue shares of their stock. I know that seems crazy because shares seem so made up, like they're just making up value, but if you look at it and you calculate it, and a lot of people have thought about this, it's the cost of equity is usually typically higher than the cost of debt. So let's just get into some of the recent headlines. One thing before I go into that, Hanesbrand cut their dividend a couple years ago, and that was where we really saw the crash. I bought Hanesbrand as it was an 8% yielder, and it was a dividend. I call it a dividend trap. So there's stocks like that where you see a high yield, but it's unsustainable. And that wasn't the only reason I bought it, but I was like, hey, this is pretty nice. I like, as an investor, as a shareholder, even though it's a very small portion of my portfolio, I like the fact that they are restructuring their debt and deciding to pay down that debt instead of pay out shareholders what was really an unrealistic dividend. I mean, in a recession, a consumer cyclical is going to pay me close to 10%. That was kind of crazy and unsustainable, and I'm hoping as a long-term investor that the winds will now shift. So Vicky Young, Hanesbrand sees bright future after exit from Champion. That's what I was talking about. So they had an agreement to sell the lower margin Champion. So I guess that's why I love this Champion clothes, because they're a great deal. They're a low margin. And Hanes said, hey, this is not great for us. So so forget everything I just said. But but they still have great brands besides Champion. I can't think of any of them right now, but Hanes is a powerhouse in basics and innerwear with global footprint. We're relatively even. Who is this? The CEO. Okay. So they are a powerhouse and globally and innovation. Let's see what else. Innovation pipeline. Don't get me started on some of those buzzwords, innovation. And so let's see what else we got. Let's see. The Q2 they didn't meet. They missed on earnings. There was the exit from Champion I just showed you. Oh, let's see what else. Oh, cash flow. I didn't show cash flow. I was gonna. This is another reason that I like the stock because, okay, although you look at gross profit was falling over time, right? You know, you see your margins are thin and they're going lower, 1.9, 1.8. But the free cash flow is pretty good, and what that means is after the company, you know, the money that the company kind of has left over after paying down everything, interest and taxes and blah blah, the money that they have to like do things, to spend on buildings, to pay dividends to shareholders, to the money they have to like expand and operate and increase their business, and that's a good market for that is free cash flow. So you know, you have 1 year of negative following. This was post-COVID, so this is when everyone was inside online shopping and then went outside, and then the sales dipped. So don't worry too much about that. But you look, 400 million, half a billion. So you have a steady cash flow, cash cow, $500 million. I feel it's pretty boring. It's pretty boring. It's apparel. Yeah, I'm an investor in Hanes. It's not sexy. The sentiment's low. When sentiment's low, and then the negative cycle and negative business, that's when the consumer cycle, that's when you want to buy. So that's why I'm in. I didn't call the bottom, you know, I didn't call it, nobody can, but you know, I didn't get in, at least I didn't get in here, right? So this, you know, you would be down 90% on your cash if you had held it for 10 years. That's not great. But if you'd held it the previous 10 years, you would have been, well, the previous 5 years, you would have been up 3-4x. So, you know, but we can't, who can call these? You can't. If I had a crystal ball, you know, I would use it on cooler things than this. Did we look at this? This was, what is that ad? I think, oh, the last thing on Hanes, and we'll wrap it up here on the visuals. So HBI stock, this is a nice site, Simply Wall Street. I'll probably subscribe to them pretty soon. I like, they sum it up for you like real easy. Like sometimes I don't want to dig. I dig through those numbers for you guys and put together some ideas, but like sometimes you just want like, what does everyone else already know? Like, I don't want to waste my time. So this is pretty good. I like that snowflake now. It's pretty fun. A consumer goods company that designs, manufactures, sources, sells a range of innerwear. Okay, so we know that. Earnings are forecast to grow 50% a year. Trading at good value, that's why I like stock. I told you that in the beginning, it's a value play. And people are ignoring it. And you look at the risk checks, the only one it comes up with, and this site's pretty good on these things. I mean, this is not great when you look at this, but the risk checks are pretty good. It can't cover interest payments by earnings. So that is kind of a problem. We can go back and look at that, but I don't like to look at accounting too much, guys. It's kind of boring. That means is that the interest on the debt it's hard for them to cover those payments, and that sucks. And that is part of why they kept the dividend, so they can pay down that debt, so that those interest payments are lessened, and that's why the future of the company is positive right here. That's why it's such a high score and a value. So value and future. Dividend is 0. You know, they cut it. Health, it's coming out of some problems. I've explained and showed you some of the problems and past, you know. So let's look at the other risk checks. You know, are the revenues and earnings are growing. Dividend is, they do not pay a dividend. Meaningful market cap, negative equity. Although McDonald's, I think, has negative equity, and that's a great company. But are they forecast to achieve profitability? Yeah, so it passes all these, you know, you can go look for yourself. So you saw the process of how I look into stocks and how I think about things and finances and charts and numbers and all that stuff. And I think it's an art and a science. It's imprecise. If you like this kind of content, please subscribe, help out the channel, helps a lot. Let me know below. If you like this stuff, comment, give me a comment. It helps the algorithm, help me out. I'm trying to get this up to 1K, get monetized on YouTube, baby. Make that money, baby. Make that money. I'll see you next time. Fading away.